Hey guys, it is Mark Coe for March 19th. I wanted to give you a little update here. I haven't done a video in a while, so I wanted to get back into it, show you a couple things that are transpiring and developing. I wanted to look at, first off, euro dollar here. So it's euro dollar, and wanted to show you kind of how well these levels are working intraday. So just take a quick look at support zone number one. So we had support zone number one, 22.55, and nice reaction off that. Now the long-term analysis in euro doesn't change, which is that it's a sell bias off top edge, but top edge is a couple big figures away. So this is shorter term stuff and something we're doing in the room right now with the count. So we had count at the bottom. So something the subscribers got to see in real time. The bottom edge never gave way, and so what I'd written in the FX sheet for the day was 22.55 to 70 give way. If gives way, should see some further downside. As you see, that was very well contained, hence why I do the levels like that. Take a look at another one here, E-minis. Now E-minis have been very volatile of late, and I want to take a look at the break. So ultimately we went sell side bias E-minis back on the 13th of March up at this zone. From that point, right, so this is E-minis, we've seen almost an 80-point plus reaction. And think about what it is I'm doing here. I'm looking at edges. So we have bottom edge in the E-minis, gives way on the 13th of March. Now this is all with the sell side bias. So I don't really have an opportunity to sell it on the 13th of March, but it's the 14th of March. Again, I've just mentioned something that we look at in the room, which is a count. It's a timing indicator I use. Just something for subscribers to take a look at that we do on the shorter term. But you'll see with a negative count, right, times this with the sell side in mind at 27.80. So that's your blow through the level at 27.80, tap back to it. That was opportunity number one. Here's opportunity number two. Again, blow through a level, tap back to it, tap back to it, tap back to it. So that's opportunity number two. And then this morning, the early morning action took you right back into 27.45. Now this is at the US Open. So from the sell side bias, 1, 2, 3 short opportunities in the E-minis. Again, all against a level, and that's really the key of what I do here with my analysis in the short term. So it's really good for shorter term analysis people to see this. And you know the idea, the approach with levels is that it's multiple time frame analysis. I just focus on the short term in these videos because anybody that's watching the videos can certainly see kind of the shorter term reaction to it. I always like to do this top-down analysis where I have a longer-term bias and then continue to work that bias. I'm going to show you another one. So this is E-minis that is basically rotated 80 points in a matter of 4 days. Now, part of that is that you have actual volatility within the E-minis. Now, I'm going to show you another one in dollar yen that has not moved nearly as well, but it has maintained the buy the dip mentality at this level, right? So this is one that has not reacted nearly as well, but again, the idea being that you're playing it off of the edge. So what I've been working in dollar yen for the last several days has been 55 to 70. Now that's the support that needs to hold. So the idea is buying bottom edge dips into that. And so it's always the idea of buying into the support, selling into the resistance. Now, again, I just showed you E-minis that has worked 80 points. 80 points is a pretty big movement in E-minis in the futures. This is a lot tighter. This is dollar yen currency. We've seen no real movement in front of the FOMC here, but the bias has been as long as 55.70, 105.55 to 70. It's a tight little area, or let's say actually like more like 40 to 55. As long as that bottom edge support holds, really look at it as a buy the dip mentality. And you know the idea keeps being rinse and repeat, rinse and repeat. Some of those you're going to get bigger rotations, some you are not. And the idea becomes, can you line that up with a bigger picture perspective and continue to trade it like that? So we'll continue to look at this. I would expect certainly some slowdown in activity as we approach the FOMC on Wednesday, where a rate hike is priced in, but we'll see how it reacts. So for the 19th of March, it's Mark Coe, and good trades to everybody. Cheers.